Hello and welcome everyone to Oil Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know for the oil market as we go into this week? Right now, we're trading at the upper end of the recent range for oil. We've actually seen 3 consecutive days now of gains for US oil. It is quite interesting that we are again seeing oil prices, they're rallying in the lead up to an FOMC statement, which of course we have on Wednesday. So that'll be a key mover for oil prices. We are already starting to see oil creep up higher ahead of that news item. We also need to watch out for geopolitical risk in the markets as well. More recently, we've started to see the risk start to dissipate a little bit. The tensions between the West and Iran with regard to the Strait of Hormuz, which we've seen quite a lot of escalation in tensions recently. However, that started to dissipate over the course of this week, and that is not really providing such a catalyst for any sudden moves so far anyway for oil. But that can very quickly, that breaking news, anything that does escalate in the region, cause oil prices to suddenly break out to the upside. We had the GDP data last week in the US as well, which although it was better than forecast, overall it did show a reduction over the latest quarter. So from a demand point of view for oil, that's not hugely bullish. But at the same time, we have seen some support come in with regard to geopolitical tensions at the moment that can disrupt the overall supply for crude oil. So we're at an interesting point here where WTI crude oil, it remains range bound. It's finding support at 55. It's finding resistance around 57.50. Normally, the seasonality for oil over the month of August is also quite strong, similar to gold as well. But you can get that final dip at the end of July and also the beginning of the month as well, given that we have non-farm payrolls on Friday, FOMC statement on Wednesday. You could see some choppy price action, and rather than chase it at the upper end of the range, pullbacks for me would be a better way to go long. Now, of course, what you could do as well, if we continue to be able to hold above 57.50, also look at the 20-day moving average, for example, on the chart, just from an additional confirmation basis, because we're holding below that level at the moment. If we can break and close above that, and especially if that happens around the FOMC statement, if we see a drawdown in oil inventories and the FOMC statement sees a dollar sell-off, that could help oil to break out higher. But hedge funds have trimmed their positions over the latest week. Again, it could be just profit taking, or it's the start of something more significant. If we just maintain around the current levels around 57.50, we'll be looking to see if we can actually get additional confirmation, break and close above those levels, and springboard higher later on in the week. So with that, of course, have on the radar this week 3 points: API data on Tuesday, look out for the oil inventories data on Wednesday, and also the FOMC statement and the non-farm payrolls, in fact, on Friday as well. So that has been Oil Asset of the Day, and I wish you good trading.